Hello out there, dividend growth stock investors. It's Colby, the DGI Crab, and today I want to talk to you about what has been a pretty popular talking point amongst the DGI Crab community here, and that is non-US dividend investments, specifically ETFs. What is the best place to put my money if I am a dividend growth stock investor and I want to have some non-US stock exposure? Should I research and purchase individual shares of companies, or should I put my money into an ETF? Well, I'm not an investment professional, not licensed. You should do your own due diligence before you make any decisions. I'm going to talk to you about my opinions about all of this, and you can make up your minds for yourself. But for me personally, I don't want to have to keep track of what's going on with all of these other major countries' individual economies to know what particular stock or sector is going to do well in one way, shape, or form or another. I really don't have any time to have that kind of in-depth knowledge about what's going on in Germany or in Britain or Canada, Japan, you name it. It's hard enough trying to keep somewhat on top of that kind of stuff just here within the country that I live in. So I put all of my non-US related money into VYMI. It has so far been my very favorite ETF for international investments. And I did a video. You could go and watch it. It's the most viewed video in the history of the channel up to this point, comparing VYMI to other popular ETFs that are similar to it. And VYMI came out with flying colors. And today we're going to have VYMI. We're going to take a look at it versus SCHY and IDVO to see if either of these options could dethrone VYMI as my only non-US stock investment. All right, you guys, so let's talk about it here. So VYMI. Well, I chose VYMI because it's an international ETF. It's got roughly 1,500 stocks into it. And think of it as like an even bigger and more diversified VYM. So you're getting just lots of really high quality companies, good sector diversification, qualified dividend income. It's just whereas VYM, the American counterpart VYM, is going to have like 500-ish stocks in it at any given point. VYMI is going to be more like 1,500. SCHY is Schwab's answer to this ETF, from what I can tell. Fairly new. Now, by the way, all three of these ETFs are fairly young, relatively speaking. None of these ETFs have hit the 10-year of history mark yet. VYMI is the oldest, most established of the three, but none of these have been around for very long yet, just as a note. But SCHY is basically set up to run more or less like the American counterpart SCHD does. SCHD, the internet's favorite dividend growth ETF. It's been a darling in the dividend growth community for a really long time now. Maybe not quite so much this past year. There have been some people that have soured on it a little bit, but still just a great fund. Shout out to SCHD Stan and everyone out there that's buying SCHD. But listen, it's going to have, roughly 100 to 125 companies in it. SCHY will, and they're going to try to structure it out to perform as similarly to SCHD as they can, which would make it so far and away the best international ETF. It wouldn't even be close if it would perform in that same neighborhood as SCHD. Now, with IDVO, this is going to be the international counterpart to DEVO, which is going to combine dividend focused investments with an option strategy to generate monthly dividend income, and help to mitigate downside risk is basically the idea. So it's the same firm that runs Devo, same strategy, same everything, just non-US stocks. So very intriguing. So we've basically got our international SCHD, our international VYM, and our international Devo. So I think that that's a pretty exciting comparison here to look at when we're breaking it down here. Now, here's kind of just what I generally am going to expect. These aren't like official numbers or anything. This is just the way that I kind of look at these three ETFs and how my mind thinks that they're likely to perform over the long term. With VYMI, I like it because I think this is like the 4% all day ETF for me in this space. I feel like if I were to go 20 years into the future and look back at a 25 year history of all three of these with VYMI, I think what I'm going to see is average share price growth over that very long term of about 4%, a starting yield of 4% plus, and a year to year dividend growth rate of 4% plus. Uh, Not amazing, but just sort of across the board, very stable, very solid. Gives me that exposure that I want to some non US investments because I'm not going to really study non US markets. I'm not expecting to get unbelievable results there, but I do want diversification and I do want solid, stable performances across the board. So that's why it's a good base level, set it and forget it kind of an investment for me in this space. Now with SCHY, I would expect maybe a little bit better share price and dividend growth than VYMI because they're going to be more targeted. Instead of 1,500 stocks, they're going to have 100 to 125. The starting yield, I would imagine at times, is going to be lower. Maybe at times it's higher. Bottom line is, I think it's going to be more volatile just because dividend paying companies don't seem to handle their dividends in the non US market the same way that US companies handle them. I just think that getting the same kind of consistency on the international side is going to be tough for SCHY. We'll see how it goes. IDVO, this one's really interesting because I think that a starting yield is of around 6% is going to be probably pretty standard fare for this one. It's the only one that pays monthly. It's likely going to be the most volatile, I would think, but it's going to be just based on such a quality approach on the US market that I think is going to be a little bit easier to replicate by the fund managers that are actively managing it than it's going to be for a passively managed SCHY fund to replicate the SCHD US counterpart. So that's just kind of sort of where I'm sitting with these three, you guys. Let's now hop over just to Seeking Alpha, do a quick overview of the three just so you can get an idea, see what I'm seeing. VYMI, my current top pick, is currently trading at 84.35 a share. If we look at the 5 year history, we see 53% overall share price growth. So as you can see, it's pretty stable. Like with anything else, it goes through little dips and valleys, but nothing overly wild. We're in the middle of a really hot stretch right now for the non US stock market in general, but pretty steady. Not anything you have to worry too much about. On the dividend front, you're going to see here dividend yield, share price being way up right now is just below 4%. Usually this is going to be more like 4.5% is what you're going to see. 5 year growth rate at 10.63%, maybe a little bit on the high side. But if we take a look at the dividend growth tab since its inception back in 2016, and we're going to go from 2017 to 2018 as that first full year for dividend growth. We've got 12%, 10, then it went down 26% the next year. Then it rebounded, went up 47% in 21, down about 3%, we'll call it in 22, then 8 and 7% increases over the last couple of years so far. You're going to expect this, you guys, with non-US paying stocks just in general. A lot of the best non-US stocks that have good long dividend paying histories, they just don't do it in the same way with these non-US companies, you guys. Their growth streaks aren't as prioritized. They're a little bit more all over the place. This is about as steady as I think that we could expect from just about any of them up to this point in time. We're going to look at SCHY next. Less history here, you guys. They just started it in 2021. But if we start here with 2022 is that first full year, they did an 18% dividend increase followed by a 9.6% increase in 24. Not a bad start, and it looks like the yield was in that 4% range also. So this one, I gotta see a bit more history, but it's definitely off to a nice, encouraging start. A little bit lower starting yield, but maybe some really high dividend growth. I don't know. Guys, it's going to be a tough one to kind of project, but when it started out, it was 25 dollars a share, and in the couple of years it's been around, it's gone up into the $28 range. It's a fairly flat trading thing, but good dividend growth from what we can see. And then finally, we'll look at IDVO. Very short history on this one, you guys. It just launched in September 2022. $25 a share. It's climbed all the way up to $35 a share. So even better share price appreciation than the SCHY. And on the dividend front, right now the starting yield's 5.4%. As I said, it does pay out monthly. So we do like the monthly payers there if we are really needing to live off of the dividends. And our dividend growth in the first full year that we have to measure here from 23 to 24, we saw an 11% increase in the annual payout while the thing was yielding 6% plus. Very, very intriguing. Let's remind ourselves here about the American counterpart here on this one, DEVO. DEVO dividend growth history, we can see here, has been not 100% stable, but not too bad. 87% that first full year, and then down 39. That was probably just some timing with when some of the year end or beginning year payments went through. 13%, down 6, flat, up 11%, yielding in the, we'll just call it mid fives. So yeah, I think all three of these are actually pretty nice looking options right now. So for me personally, I am going to continue pushing forward with VYMI. I believe that I have more history built up on VYMI, and I think it's just going to be a little bit more predictable at the end of the day. The only thing I invest in that is not in the US markets is this VYMI ETF. So I really like that it has the exposure to so many different companies and different markets, and it's just not a part of my portfolio that I am going to expect anything out of other than relative inconsistency. So I'm going to get the most consistent of the three that I think I can with VYMI. Enjoy a good, respectable starting yield, whether I'm just starting out and I'm a young investor, or I'm an older investor and I'm trying to get current dividend income coming in right now. It's just kind of a good overall spot to be in because I'm going to get enough growth that I don't feel too bad about going for a higher yielding investment in that younger years of investing when I really want growth. But I'll get enough growth that it seems worthwhile one way or the other. And for the older investors, if you're relying on some income generating things that like bonds or call option things like your JEPQs, your JEPIs, your SPY-Is, VYMI's dividend might over the long haul be something that grows faster than those. So even though it doesn't yield as high, it still might be a better growth play for the older investors. But that's where I'm at with it now, you guys. If you like SCHY or IDVO better right now, I don't blame you. I don't want to complicate my own strategy too much by adding into these other two ETFs right at this moment. But maybe at some point, maybe next year in 2026, I can do a side portfolios or something with just these three, like an international dividend ETF race, and see how it goes. Let me know what you think. Leave the comments down below, and I'll see you next time.